Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So today I want to talk about how I saved $21,000 on my 26 unit apartment complex insurance premium, right? And talk about the pros and the cons of making this move. So for context, for those of you who've been following my channel for a long time, you know that I've been really big on replacement cost insurance, also known as RCV when you look on your insurance quote. So RCV insurance is basically means in a total loss. So imagine the 26 unit apartment complex burned down to the ground. What is it going to cost to replace building a brand new 26 unit apartment complex to 2024 standards, right? So I bought my 26 unit apartment complex for $500,000, right? But realistically, if I want to rebuild a 26 unit apartment complex today in 2024, it's not going to cost $500,000. It's going to cost $3.3 million, right? To rebuild brand new A-class apartment complex, right? So, so because of that, replacement cost insurance is typically going to be more expensive, right? Because there's more payout that the insurance has to give you, assuming that, after they do their due diligence, right? Of course, insurance companies are going to want to do their due diligence. If you had a complete loss and a complete fire that burned the whole building down, they're going to do their inspections, all that stuff, right? It's a long process. But if assuming everything goes well, they're going to give you $3.3 million after you pay your deductible of, whatever it is, $1,000, $5,000, $10,000, whatever that looks like. And they're going to give you $3.3 million and you're going to clean up the area and rebuild a brand new apartment complex just from scratch, which is probably going to take 2 or 3 years, right? So that's replacement cost insurance. So because it can pay you out more, it's going to be more expensive, right? So the premium is higher. So I was quoted for about $30,000 and the replacement cost value is $3.3 million and it goes up every year, right? So every year the replacement cost insurance goes up. So if it goes up, then pretty much your premium's gonna go up, right? So the year before it was $3 million to do replacement cost. The year before that was 2.8. So every year it goes up because material goes up, labor goes up, things get more expensive, right? That's the whole point of inflation, or the downside of inflation is things go up, right? Versus ACV insurance, which is actual cash value insurance, so it's ACV for short. This is the usually more cost-effective insurance option, but if you had a total loss, it would not give you enough money to rebuild your apartment complex, my 26 unit apartment complex, from the ground up to 2024 standards, right? So for context, my ACV policy quote was $9,000. So ACV quote is $9,000 and it gives me $1.1 million in coverage versus replacement cost insurance, which is $30,000 a year, which is $21,000 more, and it's for replacement cost of $3.3 million, right? So you can see that big gap there, right? So for that $3.3 million replacement cost, it's $30,000 a year versus $1.1 million actual cash value is $9,000 a year. That's a $21,000 gap, right? So I've always been paying for replacement costs because that's what I believed in, right? But now, once I kind of thought and asked myself, like, okay, like, if my 26 unit apartment complex burned down to the ground, what do I want to do? Like, do I want to rebuild the apartment? And I thought about it and just thought, you know what? I probably don't want to deal with that. That's too much stress, right? I don't want to have to deal with demoing a 26 unit, rebuilding the 26 unit from ground up, dealing with architects, dealing with contractors for like 2 to 3 years. Like that's not something I want to deal with, right? I'm not a developer. That's not me. I'd rather take that money and go buy another apartment complex and just fix it up, right? Renovate the inside. That I can do. That doesn't take long. That I've done that before, right? So I'd rather deal with that. So once I realized that, I'm like, it doesn't make sense for me to do replacement cost insurance, like because the area, it's a C-class area. It's not the greatest, but it's not the best, right? It's not the worst either. It's working class, and I don't want to deal with the construction, right? But if it was in an area that was like A class, prime land, by all means, maybe I'll do replacement cost and do it. But this area, it's C class area, and I don't want to deal with building it. So when I learned that, I just like, all right, maybe I'm gonna get quotes for actual cash value or ACV, and see what that looks like. And I was getting quotes for like $9,000, and my jaw dropped. I'm like, wait a second, that's literally one third the cost compared to what I was paying before. So if I save $21,000 a year, that almost increases my cash flow by about $2,000 a month, which is like 3 units of rent because I'm averaging $700 a month in rent in Oklahoma. So I just increased my cash flow by $2,000 a month. I increased my NOI by $21,000 a year. And assuming it's a 10 cap market for simplicity, I just increased my value by 210K, right? So not only am I saving $21,000 a year, I'm getting $2,000 a month in extra positive cash flow. I'm increasing my NOI by $21,000 a year, which, assuming a 10 cap, that's 210K of additional value in real estate, right? Because the value of commercial real estate is NOI divided by the market cap rate. So if I increase my NOI by $21,000, I increase the value by 210K, assuming a 10 cap. So I just increased my net worth by 210K because I was going a little crazy on insurance. And the whole point of ACV insurance is if this thing burned down to the ground, what happens? So if my apartment burned down to the ground, I get $1.1 million, right? I cannot rebuild this apartment, right? I don't have enough money. I need $3.3 million to rebuild this apartment complex, right? So either A, I could build a small little apartment. Maybe I can build instead of a 26 unit for 3.3 million, maybe I can build because I have one third of that, maybe I can build an 8 unit for 1.1 million, right? Or I just could take my $1.1 million. Obviously some of that goes to the loan. So I owe the lender, let's say $300,000. So I have $800,000 left, right? But I put in about $100,000 for down payment, plus another, let's just say, $300 of renovations. So I put in $400,000 of my own money. So if I got 1.1, I pay the lender off for $300K. I get $800,000 left. Half of that's money I put in. I have $400,000 of profit that I can use to basically, let's just say, clean up the land, and I sell the land to developer. Let's say I sell the land for $100,000, so I get another $100,000 in profit, right? Or let's just be generous. Let's say I sell that land and it's worth like, I don't know, $400,000, right? So I get another $400,000 profit from selling the land. I have $800,000 now, plus the $400 I put in, so that's $1.2 million. I can take that money, use it as a down payment to buy another apartment complex that's already existing and use that money to renovate it, right? I'd rather do that than deal with like the construction, right? So I'm making the pivot now where I'm going from RCV insurance to ACV because I was like, you know what? I'd rather get the increased cash flow, increase my NOI, increase the value, and if it burned down to the ground, as long as I can pay off my lender and get my money back and some extra money on top, I'm fine. I'll take that money, sell the land, get some money there, and then dump that money into another piece of real estate, right? In another better area, potentially, right? So once I learned that, I was like, you know what? RCV insurance is not worth it, right? I'd rather do ACV, save the money today, and if it burns down, know that I'm going to have to just get the money, clean the land, sell the land, and then move on, right? And I'm okay with that. Right? I'm okay if it burned down. I'll buy another one, right, in Oklahoma, right? So now I'm getting quotes for my 20-unit apartment complex because I have RCV insurance, which is, probably like 1.5 million to rebuild it, and it's 13K or 15K of insurance. I'm getting quotes for ACV. If ACV is like half the cost, by all means I'll pivot, right? Because if that one burned down to the ground, that's the unit with bed bugs, right? By all means, I'd rather just, if it burned down, kill the bed bugs, kill the property, and then move on to somewhere else, right? Maybe I want to buy real estate somewhere else. So, it really helped change my mindset to that, where I was, going a little bit ham. But like you said, by all means, if you have a brand new, this is how I kind of see it now. If I bought in a nice area and I rebuilt a brand new apartment complex, by all means, I'm probably gonna get replacement cost insurance because it's an A-class asset. It's brand new. If it burns down the ground, yes, I want to rebuild it. But I own an older C-class asset in an area that's a C-class. If it burned down to the ground, I'm ready to move on. That's okay, right? Because maybe people don't want to stay in C-class forever, right? So, your priorities might change later down the road. Where if it burned down, like just take your money, buy it somewhere else, right? That's a good problem to have. So, because of that, I made the pivot, but there's risk, right? I know that if my 26 unit burns down, I don't have the money to rebuild it. I have to demo it, sell the land, and buy another property and deal with that. I'd rather do that versus rebuild an apartment from the ground up. So once I made that analysis, I pivoted. So now I saved $21,000 on my 26 unit, and I probably am gonna save, I don't even know, maybe another $10,000 on my 20 unit. I'm waiting for that quote to come back. I'll keep you guys posted on my 20 unit and how that insurance looks and how I'm going to pivot. But let's say based on my 26 unit, I'm using the same insurance company. It's a 1/3 the cost, right? Like if it's 5,000, that's another 10,000. That's $31,000 of savings, and that's almost like another 2,500 bucks a month in cash flow, right? Like that can help cover my mortgage or my rent. The average rent in Los Angeles is 2,500. If I was renting still, that $2,500 in extra cash flow by saving on insurance could cover that, right? So sometimes you gotta evaluate what you want to do, right? Like, yes, it's okay to get RCV. It's gonna cost more, but know why you're doing it and be intentional. It's okay to get ACV. It's cheaper, but know why you're getting it, right? And pivot accordingly. So, hopefully this gave you value. Let me know if you have questions. Let me know what you would do in your situation. Would you stay RCV or are you ACV, right? Like, and why are you doing it? If you want to buy multifamily real estate with guidance, check out my mentorship program. Please let me know any questions. Like, comment, subscribe, and hope to see you in the next one. Thank you so much.